In 1999, there was a magic spell on Wall Street. 4 characters long, added to the end of your company's name, .com, and studies later confirmed what everyone suspected. Your stock price jumped, on average, by more than half. Companies that sold cement did it. Companies that had no products did it. The spell worked because nobody wanted to ask how asking how was for people who didn't get it. Within 3 years, $5 trillion of that magic evaporated. This is the .com bubble, the crash that proved you can be completely right about the future and still lose everything. August 9th, 1995, a 16-month-old company called Netscape, maker of a web browser, giveaway of its own product, goes public. The stock is priced at $28. It opens at 71. By December, it touches 174. Wall Street stares at that chart and learns a new religion in a single trading day. Profits are optional. The internet is destiny. And here's the thing this series keeps teaching. The believers weren't wrong about the destiny. The internet really will change everything. Remember that. It's what makes this bubble the most seductive kind, the kind built on a true story. What followed was 1637 with fiber optic cables. Companies with no revenue, sometimes no product, raised hundreds of millions on a business plan and a name ending in .com. Analysts invented new metrics to justify it. Forget earnings, count eyeballs, count clicks. A grocery delivery startup burned through $800 million. Dot.com spent millions on Super Bowl ads, including its famous sock puppet mascot, to sell dog food below cost, and lasted 268 days as a public company. Day trading became a national pastime. Office workers quit to buy and sell from their kitchens. By early 2000, the NASDAQ had quintupled in 5 years. The chart had gone vertical, and you already know from a Dutch tavern in 1637 what the vertical stretch means. The exits were closing. March 10th, 2000. The NASDAQ closes at 5,048, a number it will not see again for 15 years. There was no single villain that morning, no assassination, no bank failure. The Federal Reserve had been raising interest rates, making borrowed money, the bubble's oxygen, more expensive. A few giant insiders quietly sold. A magazine cover asked whether the emperor had clothes. And the belief the only thing actually holding up half these prices began, molecule by molecule, to dissolve. Bubbles don't pop like balloons. They deflate like arguments, slowly, then suddenly, then all at once. The fall took 2.5 years, and it was merciless precisely because it kept pausing. Every bounce was declared the bottom. Every bottom broke. Pets.com went from IPO to liquidation in under a year. Webvan, gone. eToys, gone. Hundreds of companies simply ceased to exist, and with them 1 million jobs and the retirement accounts of everyone who had finally reluctantly bought in at the top, the shoeshine boy moment of a new century. By October 2002, the NASDAQ had fallen 78%, $5 trillion in paper wealth, roughly the entire annual output of Japan, had returned at the nothing it came from. Now the epilogue that makes this story different from the tulips. Buried in the rubble were companies that were exactly what the believers had promised. A struggling online bookstore watched its stock fall from $107 to $6, a 94% collapse. It was called Amazon. The fiber optic cable laid by bankrupt telecoms became the cheap highway the next internet rode on. The technology was real. The timing and the prices were fantasy, which hands you the strangest lesson in financial history. The optimists were right about everything except the only thing markets price, when. The .com warning sign is 4 words, and they are the most expensive 4 words in investing. This time is different. Every bubble in this series wore them. Sometimes the technology even eyes different. Railways, radio, the internet were all real revolutions. But revolutions don't repeal arithmetic. A price is a claim on future profits, and no story, however true, makes the claim infinite. Tomorrow we meet the man who wrote this entire playbook 3 centuries early, a convicted duelist who charmed his way into running France's money, invented the word millionaire, and then had to flee the country he bankrupted. John Law. A new fortune falls here every day. Subscribe.